All right, guys, today I'm going to bring you an update on SoFi. They finally got that bank charter catalyst that we've all been waiting for, but the stock has continued to sell off. They do have earnings coming up in the next couple of weeks, so I'm going to give you my thoughts on that. I'm also going to break down the chart and give you an idea of where I see the SoFi stock price headed over the next couple of weeks/months. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin and I am your host. In today's video, we are going to take a look at the SoFi stock. I have made many videos on this company, going in depth on the bank charter and what it means for SoFi as far as revenue and margins and long-term business model. So if you want to see me go over that, I will link all those videos right here so you can check those out. I'm going to focus on the price action and the short term in this video. Everybody asked me, where's it going? Should I buy it? Should I wait? So today I'm going to break down the chart and I'm going to give you my thoughts of where the SoFi stock price could be headed over the next couple of weeks, running up until earnings and then even after earnings. I'll also give you some of my thoughts on the overall bank charter, just what it means for SoFi in the long term and the short term. I do think that there's pros and cons there, so I wanted to share those with you. If you're new around here, guys, and you want to see more videos like this, subscribe to the channel for me. Hit the bell if you want to get notified every time they come out, and then come over and join us at the Patreon if you want to be part of an amazing family and get all of our trade setups. Day One Squad, I love you guys. Thank you for your support. It really does mean so much to me. But guys, let's get started. So the first thing we got to talk about, the bank charter finally completed, right? We got the bank charter. That was the catalyst we've all been waiting for. But unfortunately, the stock has continued to sell off. It was up like 25% intraday, but there just wasn't enough demand and sellers stepped in, pushed it all the way back down, and it ended about 5% up for the day, which is not bad, but it shows you the lack of demand or the lack of interest in the stock as of, the last couple of weeks, and it's continued to sell off since then. So I think it could be headed to much lower prices. Like I said, if you want to see me break down the chart, give you those levels that you should be looking to buy, and then also kind of my price targets of where SoFi stock could be headed if everything goes right in the next couple of weeks. Stick around till the end so you don't miss that. Guys, couple of things here with the bank charter. The pros are obvious, right? For the long term, right? It makes SoFi a bank. They can lend out, their members money. It increases operating margins. It opens them up to, a much broader audience. It lets them cross-sell products so they have more of a customer satisfaction, for say. But the pros are long-term. They're not so much short-term. The cons are short-term. I think the cons will affect the stock negatively in the short term, but you really won't feel the effects of the positive until, at least a couple of years away. The cons are going to be stuff like this, guys. Higher operating margins and compliance costs. It costs a lot of money to do this type of stuff, guys. And with that additional compliance cost, they may have to raise additional money. If they raise additional money, they either have to take on debt or they have to issue more shares. So dilution. So that could push the stock down further in the short term. The next thing that I see as kind of an issue, guys, is it makes investors look at them like a traditional bank. So the valuation metrics, the insane PE ratios, price to sales metrics, those are all going to be way too high when looking at SoFi as a traditional legacy bank. They're going to be compared against all of their competitors that are the big traditional legacy banks. Now, that's obviously good in the sense of they're going to look like they have way better revenue growth, but the valuation metrics are going to be insane and they're going to look overpriced, especially from the investor that just kind of looks and sees, oh, okay, they're a bank. They don't really know that much about the company. They just look at, pure fundamentals. That could be a negative impact on SoFi in the short term. Again, guys, just throwing my thoughts out there. I love SoFi for the long term, and I think they're going to do really well over the next, 5 to 7 years. I did see an article of some guy saying that the Super Bowl was going to cause a massive short squeeze because investors were going to get, exposed to them in SoFi Stadium. Obviously, that type of stuff is crazy. You can't base an investment strategy off of that. Again, we just want to see in the short term where the stock is going so we know where to buy and know where to take profit and know where it could be headed next. The next thing, guys, the student loan moratorium is still intact, right? So that's a huge piece of their revenue that they have not been getting, but that will be lifted in May as of right now. It's been delayed and delayed and delayed. But if it comes back in May, that will open up another stream of revenue that they haven't had access to for at least a year. So there is, some positive for SoFi in the near to short term. But I do think that with the overall market not looking so hot, SoFi could be in store for much lower prices. But let's go ahead and jump over and take a look at the chart, guys. Real quick, guys, we've looked at this chart so many different times, and it's a good looking chart, right? Not. No, it's so bad, guys. I mean, 3 lower highs right in a row at the same level. Just recently, it broke a major inflection zone, guys, that goes clear back to, March. Ever since it broke it in January, it has back tested it as support every single time. And look what happened recently, guys. We broke it. We back tested it as resistance not once, but twice. So we back tested the top of the zone, then the bottom of the zone, not once, but twice, but 3 times. That's bad. That's really bad, guys. Now we're in a descending broadening formation, which typically is a bullish formation, right? But look at what happens, guys. When stocks are in downtrends like this and you get bullish patterns and bullish indicators, they underperform. Look at what we had just right back here on January 28th. We had Class A bullish divergence on the MACD, triple RSI bullish divergence, which typically implies a reversal could be in store. And then we had a textbook bullish hammer at the bottom of a trend, guys, and look at the reaction we got. Very poor, guys. Very poor. When you have horrible follow-through price action like that on 3 bullish coinciding variables, that's not good. You're under the 200-day moving average. You are just now starting to create a partial rise. So guys, on these broadening formations, you either get the partial decline that looks something like this, like say SoFi was to rally back up here and it comes down, it makes, about a 50% retracement, comes back to the top of the structure. When it does that, guys, it's got like 70% chance of breaking out, right? Because those partial declines are really bullish. Well, they can do it on the other side as well, just like what it's doing right now, where it doesn't go all the way up. It comes about halfway down. And as soon as it touches that bottom trend line, guys, it's got literally a 70% chance of breaking out to the downside. So, you got to be careful right now. It's looking pretty scary, guys. I mean, you're right in the middle in no man's land. And I think you absolutely could be seeing that $10 price tested here in the next couple of days, if not weeks. Guys, honestly, when earnings comes out on March 1st, if they show any sign of weakness, this thing is going to get pulverized, guys. And what's crazy is your partial decline or partial rise would be completing right around that all-time low NAV price where it wicked down on its IPO day. And I think if you break that, you could see way lower prices. I mean, let's take our fibs just to kind of take a look at our previous low, guys, right here to our previous high, where we tested the 1272. So that's another variable. You had the bullish hammer at the 1272, triple bullish divergence on both oscillators. Like, you should have reacted much stronger than that. But you couldn't even get to back test the bottom of the zone before selling off again. So you could be headed to the 1414 at $9, the 1618 at $6.76. So, who knows, guys? Maybe it could pivot here, but I think you can't even touch this thing until you go test that all-time low at $10.10 and, see what happens. Really what we need to see, guys, is we need to see this thing pivot here, continue to rally, go back up, create the partial decline, because if that happened, like I said, it would then have a spring and it would then come back to back test the top of the zone and it would run. And then look what you got. You have the momentum shifting structure. You have the left shoulder, the head, the right shoulder. So you get the inverse head and shoulders, the Bulkowski structure. And then you can, confidently take the trade. But right now, none of that is happening, guys. And you could absolutely, if you don't think this thing can break $10, it absolutely can. And with how bullish or bearish everything is looking, got to be careful. Look at your relative strength, guys. You're at 41. So you're about to enter into the bearish control zone. you tried to build positive momentum, but you just had super weak levels, and then it started waning and you're about to flip negative here in the next couple of days. You just, confirmed a bearish engulfing candle on the daily and also the weekly. You still are, pretty peaked out on negative momentum on the weekly with just bearish convergence. You're sitting at 37 on your relative strength on the weekly. So you're, again, bearish control zone. I mean, guys, even if you go from the all-time, wick low to the all-time high, you're right at that 100% retracement, guys. So, 1313 would be $7.73, 1272, $5.17, and you don't even want to see after that. So, wave structures can tell us stuff, guys. And if you look right here and you've got an asset that makes a 78% retracement on its X to A to B, and then you make, so real quick, like, let me just show you here. So wave structure tells us, guys, when you've got an asset that makes a 78% retracement on B and a lower high on C, you're likely going to break down to a 1272 on your X to A to D, which would be a bullish butterfly. And that would take us, guys, to literally $5.22. So I'm not saying that that's going to happen, but that's absolutely what could happen. I just wanted to throw that out there. Again, guys, you jump over to the monthly, same type of stuff. I mean, just, dark cloud cover, and then, back tested the zone on the monthly. This is a super slow time scale, but, again, X to A to B to C to D, that down, you're in that C to D leg right now. And, you could be seeing $5. I know it's hard to believe, but you absolutely could do it. Until we get, clear, concise momentum shift, until we get back above that inflection zone, back tested as support, I'm staying completely away from it unless you are dollar cost averaging. If you're not dollar cost averaging, guys, you got to wait until a strategical entry. You got to wait to test the bottom of the structure and, make a lower high or a higher low or a higher high. You got to make one of them. But right now you're just in the middle of no man's land, so you got to be careful. If you're buying it for the short term, guys, why would you not wait for the inverse head and shoulders or whatever's going to, pan out here? With earnings coming up, you could get pulverized if they show any sign of weakness. And with how bad the market's looking, I think you just sit on the sidelines. If you're a long-term investor, guys, and you want to average down, again, why would you not wait until you see if it's going to, test lower levels? Again, if you're dollar cost averaging, that's fine with me as well. So, but let me know down in the comments, guys, what you think. Let me know what you think about my analysis. I think that eventually it's going to bottom out. It's going to make a higher low. And I absolutely think we will see $25, eventually. It may not be in a week or a month or even a year, but we will eventually get back to that $25 mark. And you break that $25 mark, you could be headed to way higher prices. So that's it for today, guys. Let me know down in the comments what you think. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come over and join us at the Patreon if you want to be part of an amazing family. And I'll see you guys in the next one. Peace.